Welcome back to the channel, Crypto Trend Trader with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here I've got, we're going to get started today with the Bitcoin CME futures chart. I am currently looking at the 4 hour, and essentially, if we just kind of zoom out here, we can kind of get the big picture of everything. Let's just get rid of these. So once again, we've been basically just going up in this white line parabolic uptrend. We started to deviate from that white line and started forming this blue uptrend right here. Matter of fact, let me turn off the moving averages as well. Started forming like this blue support here, moving away from the white line. We eventually broke down from it, lost it. Our blue line support broke down from it and then found support at the white line. And then, after that, we started getting our bounces. We put in a lower high, put in a higher high, and then we came back down and we started essentially to retest that white line as support. And then we eventually broke down from it, consolidated below it, tried to break back into the pattern, and were unable to do so. And then we started forming essentially this, slightly less of a slope blue support now here. But we've been unable to get back inside of the initial white support line. So what we're expecting to happen right now is we need to burst back up and get back inside that and find support again to get continuation to the upside. But you'll notice here from the all-time high to the previous peak high to, basically in line with those two touch points, we've now formed in line with the bottom touch points 2 points as well, and we're oscillating inside of this symmetric triangle. Now, typically the symmetric triangle will play favor to the upside in an uptrend. So you'll typically consolidate and then get continuation in the direction of the overall trend. But there's a couple things here telling me that that might not be the case. So first off, I'm expecting a short-term move to the downside. And the reason for that is because of the holiday today. Basically CME opened here and then closed here. And then when it reopened here. So there's actually a small gap from like that 35.85 range to that 36.550 range. So it's about a $650 gap. It's not huge. It's not a huge deal. It's not massive or anything like that. But typically it would sell back off when it opens up at some point in time and close that gap because the close was here and then the open was here. So the gap is this whole little area right there. Now the strange thing is that after it opened, the spot chart, spot price action actually sold down and would have filled that gap area, but CMEs just stood here and did not move down. And then both of them started pumping to the upside, and then we got this rejection once again to enter back into that triangle. So first off, that was a little strange. All that means is there was basically some support put in place, buy orders on the CME that stopped it from going down, or there was just no sell pressure coming in. And then finally, spot price pumped up and they pumped up together. But that was an interesting observation to say the least. So at this point in time, we are very close to breaking out of this triangle. We essentially come to the apex of the triangle on the 20th of January. So if, at some point in time in the next couple of days, we're going to break out of this triangle or get sideways continuation, and then we'll have to reassess exactly how we have it drawn. So that's an interesting observation, but it also sort of puts like a time, a stop clock on a stopwatch or time clock or whatever you want to call it on, essentially what's going on right now. So we're paying attention to that to see exactly how this pans out. But at this point in time, it looks like a small little move back down to the bottom here would be more likely. Now, what I expect because of how this is playing out, because we have essentially, I'm going to switch down to I'm going to wait to switch time frames. Because of how this is going, we're bouncing here on the bottom, bouncing here on the bottom, bouncing here on the bottom, and then potentially going to come down here again. The more times we test that support, or the more times you test a resistance, the more likely it is to break. So if we keep bouncing around here too much, it's going to look like we're going to break through it. Now let's look at our various Fibonacci's as well and just recount how they are. So we have the green 618 here, we have the green 786 here, and that was from the bottom of this wick here to the top of the overall trend. So the first time we came down to the 786. We came up to the 382. We came down to the 618. We shot up all the way to the 236 and slightly overshot it. And then we came back down to the 0.5. And now what we would expect to happen is to come all the way back up to the 236 at 38,820, or to come down lower than this 0.5 at some point in time. And then at that point in time, we would be retesting the 618 would be the next fib level. So we would be retesting this bottom line, and then it's going to start to look like, assuming we came down to it, we would treat that as support. A break of this triangle would still be treated as support, at least initially. And then what it would look like happen then is, rather than just initially assuming that we're going to get the measured move of the entire pattern and just break down to the downside, it's going to start looking exactly like this. It's going to look like we found flat support here, attempted to get up, put in a lower high, came back down, did not come all the way down to the bottom of the channel, bounced around inside this triangle, and then the break we would assume would take us back down to that 618, where we would find support at that 33,100 level. And at that point in time, we would extend out the tip of this triangle. I mean, you can do it now obviously as well, but it's going to look like a massive descending triangle. So what could that mean? It could mean that we would oscillate back inside here, attempt to come back up, oscillate back inside here, and then eventually potentially break to the downside and fulfill the entire move. As you'll see, when we broke down from this initial white support, we broke down, but we did not get the measured move. So we're still inside this pattern. So in the same way, we could break down from this one with the blue bottom right here that we're looking at, and we could just initially not get the measured move and still stay inside this pattern, and then potentially break to the upside. Although a descending triangle flat bottom with a descending flat support with a descending resistance on the top typically is favored to the downside. So we would eventually expect to get that measured move back down to 28,400, but it's not 100%. We could just as easily bounce around in here and then get a break and continuation to the upside. Patterns are not 100%. They're just more reliable based on like what's happened in the past, hence the term pattern. Is you can look at how it responds over time in different markets, hundreds and thousands and tens of thousands of times, and then derive like a probability chance of something happening. So you have a favor essentially to the downside in this pattern, but it's just as likely or just as possible that that 33% chance to the upside could play out as the 66% chance to the downside. It's just one of those things where if you take the odds on a coin flip, you would rather take the 66% chance of likelihood over the 33% chance. But it doesn't mean that if you bet on heads because it's a 66% chance, that it can't just as easily be tails. So again, patterns are not for sure, but it allows us to essentially have a small edge on the market. That way we can trade accordingly. So we have quite a few things that tell us we could potentially be breaking down from this and coming back down to the downside. And then also, if we take away now the patterns, take away our drawing tools, and then we take a look at our moving averages, you will notice as well that the first time we came down to it, we found support on the 55 exponential, but we were having trouble getting back above the 21, and we crossed the 8 and 21 to the downside here. We were finally able to find support and break back through it, and when we crossed the 8 back above the 21 here, we put in a lower high, which shows weakness in the market, although the weakness can just represent consolidation because we just weren't ready. We hadn't put in a solid base yet, weren't ready with enough buyers to move to the upside, so more people were essentially selling into a lower high, just trying to get out of that position, than there were people buying it at these high levels or escalated levels. So then when we came back down again, you'll notice that the 55 exponential has acted as support quite a bit. Here we never closed below it with all these candles. Here we didn't close below it. Here we slightly closed below it, but we were able to save it. And then as soon as we broke down to it again, we were able to save it all these candles in a row. And now when we try to break back to the upside here, you'll notice we have the cross to the downside here. We have the cross to the downside here. We have the cross to the upside here. We are attempting now, we're above the 21 and the 8. If we just stay here long enough and go sideways, the 8 will come up to us as well, and then we will get that cross again. But it won't be an aggressive looking cross. It looks extremely weak when the indicator oscillators, that are the moving averages, just sort of like go sideways like this, and then whatever direction it moves in will be an aggressive move. So if we cross them back to the upside, of course we could still break to the upside, but it looks very weak. Typically if you're on top of two moving averages this close to crossing over, you would expect people to come in as buyers, assuming that, as long as we're on top of this, that they'll eventually cross. So you would think that they would be favored to it. But obviously, the way the bots and the traders are seeing this, it does not look promising at this point. And you can tell also by the fact that typically when we break back above it with a powerful candle like this, we wouldn't want it to get sold back into back below it. So then when we break back above it like this, we wouldn't expect it to get sold back in it, like we did again. So, but again, there's a strange little gap right here as well. So if we come down here to fill that gap, we're just as easily going to reject that cross. So we're paying attention to that and what potentially could play out. Now let's switch back to a shorter time frame, and I just want to take a look at this. So you can see essentially how the pattern would be playing out here, and then we can pull up our indicator oscillators and sort of see what we're looking at. We were able to break back above the slope line here, but we did not flip it over to the upside. We were able to break above on the blue, above the purple, but we sold back below it like, fairly nonchalantly. And then if we switch it to the 4 hour, we're in those ranges where, we basically sold down, got rejected, sold down, potentially could come back up and cross it, and then potentially get a blue move to the upside and continuation. But we're also in the area where we essentially bottomed out, and we would expect a reflex move off of this bottom. So essentially what would happen is this indicator oscillator just kind of goes sideways. The blue would come up to the purple at some point in time, or the purple would come down to the blue, and then we could either get the break to the upside, and we would expect, a breakout of the pattern to retest like the highs here, or what's more likely to happen by the weakness that it's showing right now, we would come up to it and then get a lazy just kind of rejection of the blue against the purple, and then sell back off to the bottom of this pattern, and then, like I said, create that flat bottom that we're paying attention to. All right, so that's the 4 hour on CMEs. Now let's look over to the 4 hour. This one is on Bitstamp, and you'll notice that essentially what we're looking at here is when this turns red, it means that there's more selling taking place than buying. So here we had one little spot and then a little burst and then one more little spot. In an uptrend, these are the best areas to typically take an entry into. And then again, when this is down low like this and we see the green dot, that's the best place to take an entry into it. So those were obviously, this was the best entry so far. This also was potentially a good entry as well. And then again, we formed this upward sloping support line here. So when we bounce this up here now at the support zone, we're getting these sell signals again where more selling is taking place here, and then it's getting to be more and more selling here, and then more selling here as well. So what we're seeing is there's more selling taking place than buying from this area. If you compare how much red there is to how much green there is, they're at least 50-50 or there's more red. So it's starting to look like more smart money is selling than buying. And the way this is just kind of oscillating sideways, eventually the green will sort of come up here and we'll cross down below it. And then we could potentially get a violent sell-off or dump like this take place and then flip it back over red. So we're essentially in the danger zone right now at support, and we're seeing very little rejection off of it. Typically what you want to see is a hard sell-off and then a strong rejection, a strong push back away from it. And then the second time we come to test it, again, we get a strong push away from it. And then here we don't even get down to it. We get a strong push away from it. And now here we're just kind of sitting on it. And that looks extremely weak to me for the bulls to not just be pushing this back up and testing the top of the pattern, because essentially we're just sitting on the support right now instead of like bouncing up away from it and then getting rejected strongly by the resistance or rejected strongly at the support. So this looks to me like weakness in the market, and then you'll see this 4 hour candle right here, and then potentially this one that's about to close in about 20 minutes. These are both shooting star dojis. And what that means is, again, you pump up real big and it looks like you're getting ready to break out. It looks like you're showing strength, and then it's unable to be maintained till the 4 hour close. So instead of printing an aggressive big green candle here or an aggressive big green candle here, the price just gets hammered straight back down, and you end up with this big tail and this tiny little red body. So we have a nice big tail and a tiny little red body. Now, it could pump up here in the next few minutes, but it looks once again like weakness or rejection of higher prices, which is going to take us back down to the bottom of the range, potentially close that CME gap, and then, possibly get the breakdown from these levels as well. And then I want to talk just a little bit about Fibonacci extensions as well. So in this case, I drew my Fibonacci from this previous peak right here, this one, and then I drew it down to the bottom of, Let me move that over just a little bit. It's the bottom of this wick right here from that initial sell-off when we dumped down 20%. So you'll see essentially it's just drawn from the top right here at 34,700, the initial peak we did, and then it's drawn to the bottom down here at 27,500. And then what that does is it tells us once we take out this 1, which you see the 1 right there, it tells us that we moved higher than the initial move. So we broke through the top of that move, and then we get continuation to the upside. So what that tells us is we can now use our extensions to try to determine where the price is going to potentially top out. So in this case, when we pushed up here, we topped out exactly at the 1.786, which means we did a breakdown. We moved back up 100%, which makes sense. That would be a double top. And then we did another 78.6%. So we have a 178.6% move up to the top here, which is where we topped out. And then when we sold back down, we didn't come all the way back down to the support, but these levels are still relevant for the fib extension. And you'll notice that when we bounce back up, we came once again exactly to the 1.618, which means again from the bottom here to the 1.618, that was a 161.8 percent move. So 162% of the initial breakdown. So even though it's not 162% from here, it's from the initial bottom where it's drawn out. And then you'll notice again, when we sold back off, we came back down to the 1. So we found support at that previous top, which is good. That shows like a little bit of strength in the market. We broke through it to the upside, broke down below it, came back up to a lower high, but then we found support on that area. When we found support, we attempted to get strength and move back to the upside. We only made it to the 1.382. So now you're seeing that these tops right here, this is the exact top at 1.786. This is the exact top at 1.618. This is the exact top at 1.382. That is what we call confluence. When you start seeing that, it's very clear that the algorithms or the traders or the programs or the bots, whatever you want to call it, in the market are controlling it, and they're using this exact tool or these exact percentages that we're using. So once we get dialed into the formula basically that's moving these markets, it makes it easier for us to understand and then take advantage of that. So when it sold down from the 1.618, it came down to the 1. It came back up to the 382. It came down to the 1. It broke slightly through and went exactly once again to the 886. So it broke down through it slightly, but it was able to push back up and close exactly at the 1. And then from there, we came up here. We stopped the first time and got rejected at the 1.236, came down exactly to the 1 again, broke through it slightly, got rejected very powerfully, tried to break through it again, and now look, we got rejected exactly down. Now granted, there's 18 minutes left, so anything could happen, but we got rejected exactly down to that 1.236. So what that tells me is the first rejection was the 1.786, second rejection was the 1.618, third rejection was the 1.382, fourth rejection was the 1.236. So what do I expect to happen next? I expect to sell down below the 1 and then come back up and get rejected at the 1. So what that would tell me is essentially all these different areas of what could be potentially acting as support are instead not acting as support. People are selling into them, or bots are selling into them, and then they're acting as resistance instead. So we have this small little pattern here. Let's switch to a shorter time frame. Let's go to just the 15 so it's like very clear. Basically, we have this small little pattern here that's playing out, and we have the green at the bottom here acting as support. Matter of fact, I think I drew it on the hourly. Yeah, here we go. We have the small bottom right here in green that's acting as support, and you'll see it's perfect support, and then when we came down through it the third time, because you need obviously 2 points before you can draw a line, so we draw it 1, 2, and then it predicted the exact bottom right here. And then we have the top, 1, 2, and then that way we have a top resistance line as well, and then the yellow one is the heart line. So that was our first little peak here. You can see it acted as support here, acted as support here, acted as resistance here, support here, resistance here, and then once again resistance here as well. So if we break down from this rejection that we're looking at right now, which was at that 1.236, we would expect immediately to at least come down to that 35,818, which again, that would close our futures gap, and then we would expect a bounce, potential rejection off the 236. And then if we got the measured move of this pattern, depending when it happened, we just take an arrow from the bottom of the pattern touch point to the top of the touch point. That's our basically conservative move. And then what this is an ascending wedge. And typically what an ascending wedge is price slowly floats up and then eventually breaks down and gets the measured move. So it's typically a bearish pattern, so we would expect it to break down to the downside. So let's say we bounce, come up here, and then we get our break right around, what's that saying? Right around 11, let's say. That's basically going to, is that right? Okay, yeah, that would be 11 a.m. So assuming we bounce right here, came back up, kind of oscillated around here, came back up, got rejected, and then we got the breakdown and measured move right around, somewhere around that time roughly. We would expect with that to come down to 34,771. That would put us at our 1 now. We would expect to find some kind of support, potentially come back up and retest this area as resistance. And then if it acts as resistance and we get rejected, then we can potentially look to the measured move. Or in this case, we can look at exactly what we were saying about the 886 was our last support. We found it at the 1. We found it at the 886. Our next support level that we would expect if it just went 1, 2, 3 right down these lines would be at the 78.6. I'm sorry, the 0.786. So that would be 33,030. So we would potentially expect to find support at 33,030, and then the 618 is at 31,800, and then the 0.5 is at 30,900, and then again we just have more and more levels of confluence as we break down from this pattern. In the event though that we move to the top and get this breakout, I would expect the same thing to happen, to come back to the 1.5 and test that, find support at the 382, and we have broken out of the pattern, retested the resistance line previously as support, and then get potentially like a step back up, retest the 1.618, try to break through that, try to retest the 1.786 all-time high, and if we can break through that, come back down, find support, and then get this measured move, which in this case, not to be bearish or anything, the measured move to the upside for this massive pattern that we're inside of right now is going to be 47,758. So basically around $48,000 would be our next measured move. But at that point in time, I would expect us very likely to come up to 50,000 and hit the 2.618 of that measured move, or of the Fibonacci. And then also that's a larger Fibonacci target. That's our 1.5%. 150% move of our orange Fibonacci. So pay attention to that if we break to the upside. Pay attention to the 1.236 and then essentially putting in that descending triangle pattern if we break to the downside, which also is going to line up with our 1.618 of the previous top as well. So we have quite a bit of confluence, based on Fibonacci's to the downside, a little less to the upside, but we definitely still have our targets as well. So, and then if we flip back over here and we start looking at, I think we went through everything on this one. So let's go over now to one more Bitcoin chart. This is once again the 4-hour Bitcoin, and this one is on Coinbase. And you'll notice that the moving averages are slightly different because this market doesn't ever close. But essentially, the same thing is going on here. We are actually above the 8 and the 21, but we're not getting that cross like we would expect. We're not getting any strength. Typically, when you get above these moving averages, you see a powerful move up. In this case, it was followed by a rejection. As soon as we close back down below it, we get a nice powerful move to the downside. As soon as we get rejected and come down here, essentially saying that we're going to cross this to the downside, it looks weak in the market. Now, the same way when we move on top of it and we get a nice powerful candle like this, you would expect to get strong continuation to the upside. But in this case, all we're doing is just putting in another lower high. So if we stay on top of this right now, consolidate long enough, I would expect us to move to the upside and cross those moving averages positive. But right now, it doesn't necessarily look like that. We have more things probably pointing us to the downside than to the upside. And again, it's a little different on this chart on the 4-hour, but you'll notice that this 89 moving average has been saving price consistently. So the second we come down here to that 35,340 range, I would expect to find support. But once again, the more time we test this 89 moving average, the less likely it is to hold, and the more likely we are to get that move to the 200, which in this case, the 200 exponential comes in at exactly 31,400, which once again, that's going to give us this flat bottom support that we were previously paying attention to. And again, it's going to develop that pattern that we were just talking about. Now, don't mind this chart here. Just going to switch over to a shorter time frame, and we're going to pay attention to this as well. Turn off our moving averages. And inside of that larger wedge that we were paying attention to, once again, we have this small wedge that's going on. It's an ascending, broadening wedge. So it's going up, but it's getting wider. It's tight here at the bottom, and then it's getting slowly and slowly bigger. So when we broke down from this, which we did, we broke down, came back up, retested it, tried to get back inside and failed. Now we would expect to get the move of the wedge to the downside, which if we take from the top of the wedge to the bottom of the wedge, it's not going to be a massive move or anything, but you would expect from the breakdown point to the bottom to come down to the 382 of this Fibonacci level. So this fib level here is from our bottom right here to our top at that previous point. So we came from the top right here at 37.4 to the bottom right here at 35,400. So 37.4 to 35.4, came all the way back up and did an 88.6% retracement. So we made it 88.6% of the way back to the top, almost back to the top, but we failed and put in a lower high. So then when we come back down here, we would expect to go potentially, somewhere inside of this would be a micro move or an internal retracement. We could come down to the 382, find support, continue up, break out the top, and it would look bullish. Or we could break down, stair step, potentially to the downside, and then take out that bottom at 35.4, and it's going to obviously look bearish if we break down from there. So that's what we're paying attention to. We're getting currently on shorter time frames, a little bit of bearishness on the indicators. We have quite a few of the histograms in a row. Although we're above the slope line and we're flipping it over blue, we had done the exact same thing right here. We got another little push up, and then we sold off, from that high. And then here we have essentially the stochastics are selling back down to the downside, coming near the support area, but we could easily get the rest of this move as well. So, and then just speaking real briefly about yesterday's video as well, that's just a little bit on, Fibonacci's and the fib extensions, how important those can be. I think a lot of times they get overlooked by people or they're not understood by people. So I just wanted to kind of show those off as well. But yesterday's video was perfect because I literally laid out the scenario on why I took that short and then exactly what could potentially happen, where I took profits slightly above my target on the percentage of my position. I also moved down the stop loss on the remainder of my position, so that if we got an aggressive move back to the upside, I got stopped out but still in a slight profit rather than turning a winner into a loser. And that's exactly what happened. It broke down from that point and then got a super aggressive move back up to the upside, all of a sudden out of nowhere, did exactly what I said. So that's the importance of essentially being dynamic in the markets, having targets ahead of time, and then actively managing your trades so that you have a stop loss that prevents you basically from giving back all those gains. Because remember, the hedge was actually the short. The short was hedging me by taking profits on my move in my long position. So I was making money the whole time it went down, and then as soon as it bounced up to the upside, it takes out my short, and then the Bitcoin that I have goes up in value. So then once again, when it starts to top out and starts putting in a bearish pattern, I can once again enter a short, hedge my position again, and then if it breaks down to the downside, I'm taken care of. If it would have just continued to the upside, I no longer would have been short, and then I would just be making gains on my holding stack. So, that's just essentially the idea the idea of locking in profits, but without having to sell your crypto. And that's very important. I wanted to show that off as it did play out. Obviously, I would have, not been mad if it would have played out and hit my second target to the downside, and it would have been even more profitable of a short, but then my spot position would be worth less. So I would essentially just be locking in gains, but the crypto that I own would be worth less. In this case, it broke to the upside. I still locked in those gains. They go into my account regardless. And then the crypto that I have goes back up and is worth the same amount again. So it's just important to kind of show that off and exactly how it could work out, how you can essentially benefit from the move continuing in your direction or coming back up and taking out your stop loss, but profitable. And then I want to look at something else real quick. And I'm not trying to be like... I don't want to rain on anyone's parade or anything like that, but I have noticed that everybody is calling for potentially a huge altcoin rally right now or whatever. saying that it's about to be alt season. We should be shifting over into alts. Based on this chart right here, what we're looking at is Bitcoin crossed over bullish right here at the bottom. This is the Bitcoin dominance chart on the weekly. And then we've gotten week after week of bullish, moves to the upside. This is since mid-September. It's been extremely bullish. Came back up and double top, retested the 74% level, called that out well ahead of time, broke above the 200 exponential moving average here, consolidated already on top of the 200 simple moving average, which was previously acting as resistance, the dark blue here, came up, found resistance, found support, broke through it, found support, and now we broke through it again. So what it looks like is going to happen here, it looks like we're about to get this cross back to the downside, and then Bitcoin dominance is about to go down. So what does that typically mean? It typically means that price is selling off, but Bitcoin is selling off less than altcoins, or price is going up, but it's going up faster on altcoins than it is on Bitcoin. So that looks right now, theoretically, like Bitcoin is either going to go down faster than the altcoins if prices go down, or it's going to go up slower than the altcoins if price goes up. But keep in mind that we're essentially at this 200 moving average that we broke above finally. So we could literally find support right here and then move back up and get continuation to the upside, which would mean the opposite. It would mean that Bitcoin is either selling off, but the altcoins are selling off worse, or Bitcoin is going up in price, but it's going up faster than the altcoins. So I don't want to get bearish in this market just yet because we have quite a bit telling us that we could potentially get bullish. We have gotten the cross of the histogram above the slope line, and we have flipped the slope line over blue. After that, the last time that happened here, that was from mid-March of 2018, and it lasted, the blue trend, until the end of September in 2019. So from mid-March 2018 till the end of September in 2019. That's quite a while. So it's possible now that we have just crossed this over to the upside. The same way that we just crossed this over to the upside, we got some green action on the histogram, we got a little red retracement, and then we got continuation for like a year and a half right here. Okay, so it's not unrealistic to think, and the same exact thing happened here on the TJD Jewel Thief. We came back up here, came all the way to the top of the range, sold off here, and crossed the blue underneath, but still got continuation. So if we cross the blue underneath right here and still get continuation, all it means is a slight retracement and then continuation, but we would still stay bullish in this because the trend is overall to the upside. Now, is it possible we break down from here? Of course it is, but is it likely? I don't think so. I think we could easily get back on top of this 200 and get stronger Bitcoin, a higher share of the overall market cap, whether it's the market cap going down, but Bitcoin holding more value, or vice versa. That could go either way. So that we can look at the market cap chart for that. We're basically holding at this top point. We have a flat top resistance. We have a weak rejection. Looks like we could definitely break out to the upside. So, and it is potential that we get a situation like this where we get a partial retracement. That's what I'm expecting at this point in time. But as long as we're above this with the histograms and the slope line is blue on this, and we're in the bullish control zone, there's no reason to assume this is the absolute top. There's no reason to assume that. I'm just saying, me personally, I think that that's what it looks like is going to happen with a, consolidation of all this different information. So, and then I just want to make a comment real quick about basically altcoins. Everybody is calling for this massive altcoin rally. But have we not already had the altcoin rally? Have we not already seen that take place? I mean, I was looking at like the altcoin chart the other day, and we have altcoins that have gone up 3,000%, 1,500%, 800%, 500%, 700%. Is that not already an altcoin rally? 5,000%, 3,000%. Now, granted, some of these altcoins have great fundamentals. The technicals look great on them. They obviously have potential for huge gains. But is that not already huge gains? Is it not unrealistic? Is it unrealistic to think that we had the altcoin rally and it's just not happening in the exact same way that the Bitcoin rally happened? Because when we topped out on Bitcoin right back here and we hit the top and we've essentially just been consolidating, going sideways, is it not realistic to think that this was 2017 the end of 2017, and this was January of 2018, where Bitcoin essentially went sideways or sold off, and all the altcoins rallied to new highs. Like, just because certain coins, certain cryptos that have been around for years have not made it to all-time highs doesn't mean that they're going to. Very often with an asset, after it goes parabolic, it never takes out that all-time high again, or it takes years upon years upon years. And typically, it takes some kind of actual innovation or something to happen for it to ever go to all-time highs again. So something like Litecoin that never made it back to its all-time high, it may never go back to its all-time high again. Think about what happened in Litecoin. It made it to $350 or something like that in the previous bull run. That was in January after Bitcoin had already topped out. So if Bitcoin already topped out here, Litecoin made it up to like $150. I think at the beginning of the bull run, it made it to like 175, and that was like sort of the leader out of the bear market. But is it unrealistic to think that Litecoin never goes back to all-time highs? I mean, let's think about what happened. Charlie Lee, the maker of altcoin, who had like the biggest stack of altcoin ever, basically said, hey, altcoin's way overvalued, I'm dumping my stack, and dumped on the market. So is it possible that there's never confidence in Litecoin again, and it never goes to all-time highs, or it takes years after years after years, or some new innovation? Yeah, that seems very possible to me. What about something like Cardano? Cardano, basically sold off, and it's had a nice rally since its bottom at like, I think 7 cents this year or something like that, and it's made it up to like 30 something cents, and that's great. That's nice. That's nice gains for the year or whatever. But, has Cardano really done anything since then? It was in a parabolic bubble before based on speculation. And now here we are years later. And what, they put out Shelly? Did it change anything? No, not usefully. What's next? Goguen? Nobody's even really sure what it does. Go look at their website. I mean, it's confusing as hell. And when you hear Charles Hoskinson talk, he sounds smart, but he sounds like a mad scientist. The guy that talks about black holes but can never prove it. I don't know. Just speculating on, Cardano, is it ever going to make it up to what I think it was like $1.20 or something like that again? Maybe not. Or maybe it just takes longer. Maybe it's the next bull run after something actually gets done, after it potentially does something useful. Because they've been calling it the Ethereum killer forever, and it's still worth 30 something cents, and Ethereum's worth 1,300. At least Ethereum is useful. It has created smart contracts. It has executed Ethereum 2.0. It has switched over from proof of work to proof of stake successfully. It's done a lot of stuff, and it was able to make it back to its all-time high again. And if you notice what I was talking about throughout this entire bull run, as far as I'm concerned, Ethereum will be pegged, at least for the foreseeable future, at 32 to 1 to Bitcoin, because you need 32 Ethereum to stake. So I think a lot of people will buy 1 Bitcoin and 32 Ethereum, and they will stay typically in line. So if you take $36,000, you take 32 Ethereum, you take $1,300 per Ethereum, and you get roughly $36,500, roughly. There's obviously going to be some variance based on Ethereum's price or Bitcoin's price at the time, whatever. But what is it? It's basically pegged. It's pegged 32 to 1 to Bitcoin. And that's what I would do if I was an investor and somebody was like, hey, invest in the 2 top cryptos. How much you want to put in each? I'd say, well, that Bitcoin thing sounds pretty good, and the Ethereum thing sounds pretty good. So I'll take one of each. And you say, well, one's $1,300 and one's $36,000. And you say, okay, well, I'll just take $36,000 of each. I'll split it 50-50. And that's just how I think, just rationally makes sense, simple to somebody that's not going to take the time to figure out all the little details. But when you give them the elevator pitch and you say, hey, Bitcoin's great because of this, this, and this. Ethereum's great because of this, this, and this. Bitcoin is the number one. It's the first mover. Ethereum is potentially the future and could overtake Bitcoin one day. Sure, okay. I'm going to throw, $75,000 in it, or whatever the price was at the time, $20,000 in it, and, just divide it up evenly. So I get 1 Bitcoin, I get 32 Ethereum, and we'll see what happens. That's a smart bet, or a smart investment, how most people think. They don't need to understand every little bit of it. They don't just throw it all in Bitcoin or throw it all in Ethereum. They essentially just diversify within the crypto space. So that's something to say about Ethereum, something to say about these coins that have not made it to their all-time high, and yet you see a bunch of new projects that are, 1, either performing and living up to what they said they were going to do, or 2, at least have a really nice white paper and, a great a great prospect to do something great, and they've seen 5,000% gains and new all-time highs. And then you take, let's say, XRP was supposed to go to like $580 if you were in the cult, and look where it's at now. It basically made it to 60 cents. People were excited about 60% cents. That was 50% of the all-time high. So it was in a giant bubble. We got a blow off top. It went down to like 12 cents or something like that, or 10 cents, and then it recovered back to 60 cents. That's amazing. I don't even think it was worth that. And then, essentially, like they said, oh, it's potentially a security. SEC comes after them, and it immediately dumps 50%. And now it's below 30 cents, and it's staying there, and it's losing market cap or losing position on the overall, crypto market cap space, whatever you want to call it. It's getting taken over by some of the new projects that have potential. And XRP is old school. It's been around for a while, and yet here it is. And if you look at XRP and you look at the total, supply, like, it's unrealistic to think that it would ever make it to like $500 or whatever they're saying. That would literally be if it absorbed all the money in like the entire world's monetary system. It doesn't even make sense. That would say everything else goes away, and then XRP is like, the replacement for Swift, and it's money now. Like, get out of here. That's a dream. Yeah, what's the chance of something being the next Facebook and completely taking over the space, the next Google and completely taking over the space? And what makes you think it's going to be XRP? Like, I'm just saying, and again, I don't mean to rain on people's parades, but let's be realistic here. And same with the privacy coins. Maybe they go higher, maybe they don't, because people have fear of regulation that's already been called out on them. So to me, something like Binance Coin that serves an actual purpose, look how it looks. Look at its chart. It looks great. It serves an actual purpose. You get a discount on your Binance fees, by holding it. They burn Binance tokens and decrease the supply periodically. Those are two bullish things. And now look at the Binance chart. It looks great. Now, what's another one? Basic Attention Token. I think part of the reason that Basic Attention Token is so good is because it's an actual working product. You can get a browser, you can put it on your computer, you can use it for free. It's all open source technology. They pay you to look at ads or to have a screensaver on the back of your background. And if you don't want to look at ads or whatever, you can turn that function off, and it just ad blocks everything for you. If you do, you just get paid a couple BAT at a time to just look at those ads. So it essentially monetizes the advertisement and gives you back as the customer or as the end user a portion of your gains. Now, why isn't BAT more bullish than it is? Well, because probably not that many people actually bought BAT. I think most of the people who have Basic Attention Token either got in at a very low price or just got all their Basic Attention Token for free. So I don't expect it to just bust through to the moon or whatever, but it has a working product, and overall I think is useful and has a future. And what's something else that I like? Polkadot. Polkadot has potential. Uniswap, Uni has potential. Those are both things that are making all-time highs. And when are they making all-time highs? They're making all-time highs while Bitcoin is consolidating after a massive move, potential blow off top. So I'm not saying this has to be the end of the bull run overall, but it's very likely that we could get what happened in the past, where we get one massive bull run up to a blow off top, sell back off a nice big percentage of those gains, get a nice respectable retracement, and then continue on and get another massive move and blow off top. And that aligns with things like, the potential stock to flow ratio, where we hit 250,000, 300,000, something crazy, even by year end. And then we go into a long bear market consolidation after that. And then we stay in this 4-year cycle based on the having. 100% possible to me. It's happened multiple times in the past in the 4-year cycle. There's no reason it can't happen again. But to sit here and say that altcoins, because they've never hit their all-time high again, that this bull run can't be over, makes no sense to me. As a matter of fact, it's the opposite. It's nonsense to me. Many of these altcoins will never hit their all-time high again. You think Bitcoin Cash is ever going to its all-time high again? No, I don't think it ever will. I think Roger Ver probably gets sick when he thinks about what he did, selling off all his Bitcoin and jumping on the Bitcoin Cash ship. And then now when you think about how much money he would have, how much Bitcoin he would have, and instead he has a bunch of Bitcoin Cash, a bunch of Bitcoin trash. I mean, get out of here. It's never going to hit. I think it was like $5,000 or $3,500 or something like that. It's never going to hit that again. I mean, it's lucky that it got back up to like 500 or 600 or whatever it's at. I mean, you don't even hear anything about them. You would think Roger Ver fell off the face of the earth. Same with Craig Wright. He had his whole little scam, and him and Roger Ver were fighting with each other back when Bitcoin was 6,000, and then it broke down through all their little BS from 6,000 down to 3,000. And then after that, they basically slowly but surely just kind of slunk off into the shadows. And if you look at Bitcoin SV, it's even worse. And then, Bitcoin SV forks off of Bitcoin Cash, and then it becomes Bitcoin ABC off of SV. And then at that point in time, you now have Roger Ver and Craig Wright couldn't decide on which one was better, so they broke off from Bitcoin and both ended up with two worse projects. And then Craig Wright breaks off from Roger Ver and ends up with an even worse project. And then Bitcoin ABC breaks off from Bitcoin SV and ends up with another even worse project. Now I think Bitcoin SV made it up to like $15. I think it's dead flat for the year. I mean, they basically bet on the alternative and lost, then ended up with a bag of trash instead of the first mover, the best coin, Bitcoin. So if there's going to be something that overtakes Bitcoin in the future, let's look at something that's going to overtake it because of a usefulness in the space. Something like Ethereum that offers potential use case scenario. But now you're comparing apples to oranges. Bitcoin is potentially, even though the white paper says it's going to be peer-to-peer, trustless transactions or whatever, it's actually developed a little bit more into something like gold, which is a store of value over time. And Ethereum has proved to be essentially a foundation that other cryptocurrencies can be built on using smart contracts to execute and serves an actual function in the space. And then on top of that, you have things like decentralized finance, DeFi, that has proved to be useful, and potentially a percentage of the market will break away and use DeFi because they don't want to be tracked or traced. They don't want to give out KYC. They don't want to deal with intermediaries, more like purists or, whatever you want to say. But essentially you have the two breakoffs, and then you have a bunch of people that are going to stay using traditional exchanges because they like the security and they like the custody of someone else making sure that they have their keys, making sure that they're insured, making sure that they're protected. So essentially my point is that the cryptos that are going to do the best over time are not always the oldest, and some of the oldest ones are not going to make it back to their all-time highs. But the ones that are going to succeed are the ones that serve an actual purpose and do it better than anything else. So Bitcoin serves a great store of value and is the best digital store of value. Ethereum is the best smart contract, the best platform for other cryptos to be built on top of. So it's going to do good over time. And then you have DeFi space. You have your first movers in DeFi, decentralized finance, exchanges, essentially smart contracts on top of those, various little like offskirts of them as well. And some of them are going to do extremely well. And all those things serve an actual purpose that are functional over time. And you'll see that the cryptos that will do the best over time are the ones that do something that people want and they do it better. And with that, I just wanted to touch a little bit on this. Everybody is calling for this massive altcoin rally, but are you sure it hasn't already happened? Are you sure that Bitcoin didn't just blow off top and it's getting ready to break down and consolidate for 6 months or 9 months before it goes into another uptrend, a massive blow off top, hits 250, hits 300,000? I'm not so sure. I think it's very realistic to think that we came all the way up from $3,000, hit $42,000, and then we get a massive retracement of like 75%, consolidate, and then we go back up from, let's say, $6,000 or $7,000 or something like that as our low, and then go all the way up to 250,000 or 400,000 or whatever, and then break that down from there from, let's say right in the middle, $300,000, and then we do a 85% retrace from there or 80% retrace from there, and essentially go back down from that $300,000 to $60,000, consolidate inside a bear market for a couple of years, come back up to the halvening, and do this all over again. I mean, based on what's happened in the past, it's not unrealistic to think that we're going to get two massive spikes in this bull run inside of the halving period that leads to, that big boy target. It does not have to happen all at once. It does not have to take this whole year of just straight going up for it to happen. And it does not have to bring all these altcoins back to their all-time highs or our new highs. It doesn't even have to bring them around for the ride. So I just wanted to do a little deep dive and, I'm not saying that's going to happen. We might see all the altcoins 10x or 100x, every single one of them, to new all-time highs, even the trash bag projects, even the ones that the government has their eye on. But I don't think it's as likely, and I think it's more realistic to use your brain, think outside the box, and potentially address the alternative scenarios, as opposed to just thinking like everyone else in the space and listening to what everyone is saying, because essentially everybody that got in below the prices we're at right now is running an online marketing campaign where the more people you can get into it, the more prices pump and the more likely they are to make money before they exit, or maybe they don't ever exit and they just take the drawdown back again. But what I do know is what goes up must come down. So let's just keep that in mind. Keep a square head on our shoulders and just think, is it possible that this bull run is going to cool off for a little bit longer? Is it possible that we're going to sell off to lower prices and there's a massive amount of distribution taking place? I think that that's very likely. As a matter of fact, I think that it's probably over 50% chance right now. When we first got this move up here and we started finding support or whatever, I would say it was a 25% chance. But the longer we spend here, and if we get this potential breakdown into a descending triangle and put in that flat bottom support, around like 32,000 or whatever, I think it becomes even more likely. I would up it from a 50%, which essentially we're in a triangle right now that has no bias, but because the trend is up, it tends to break to the upside. I would say we're at a 50% right now. If we break down from here and turn that into a descending triangle, statistically, I would say it's 60% chance we break to the downside. And then if we break down from there, we'll have to play it by ear and take a look at what the market's telling us from there. But to just sit here and blindly follow what everyone's saying move your money from Bitcoin into altcoins, careful, because a lot of those altcoins took like a 95% drawdown, and a lot of them only make it 50% or 25% back to their all-time highs, especially the ones that didn't actually change. They had 3+ years basically, from the bear market to develop stuff and be better and get better and make improvements and improve their chain and, make a name for themselves. And most of them have done almost nothing. So that's why you see a lot of the old school ones are having weak performance and a lot of the new ones are having good performance. Because the only thing worse than a dream is a dream that never happened. If you write a great white paper and there's still potential for greatness, that's awesome. But if your white paper, you achieve what it says on your white paper and it comes out and then it's just not all that great, there's nothing else to hope and dream for anymore. So a lot of people just move on to the next. The same way the devs move on, the buyers move on as well. The holders move on as well. The dreamers move on as well. And you just buy the next best thing and hope that it performs better. And if not, sell that one and on to the next. So, well, there you have it, guys. Didn't mean to go quite in-depth on that one, but you see what I'm paying attention to. We got a quick little lesson in as well. So there you have it, guys. Crypto Trend Trader, and I'm out of here.